From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 31st, 2017. Today we're going to be taking a look at the GBPUSD, the Great British Pound versus the US dollar. Starting here on the daily time frame, for much and most of 2017, this currency pair has been in an uptrend. You can see that along the blue trend line. Not only the blue trend line, we can see that the market is, for the most part, held above the 100 period simple moving average. That's the green line coming in from the top left-hand side, the wavy line, and you can see it paralleling right along the blue trend line over the past several months. So we're in an uptrend. However, over the past several weeks, we saw the market pull back from the highs. The highest highs all the way at the top of the trend, near the 1.3600 level. We've pulled back down into the 31s and the 32s. And if we zoom it in a little bit, we can see that even for the most part, over the past couple of weeks, we've been in a period of congestion, even within the overall uptrend. Inside the blue box on the right-hand side of the chart, you can see, let's count them out. Today included 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days now, holding between the blue zone and the green zone. Now, we've seen a couple of attempts. One attempt to get above it, one attempt to get below it. But for the most part, the opens and closes, the candle bodies have been stuck between the blue and the green zone. The blue zone is 1.3155 down to 1.3125. The green zone, 1.3210, 1.3240. So for the time being, we're kind of stuck in this period of congestion. One of two things is going to happen eventually. One is it could break above it, the green zone, and go higher. That would be a breakout scenario. Above the green zone, 3240, we look for it to go up back to the pink zone or higher. The other side of that story could be that eventually it breaks below the blue zone and reverses the trend. It goes lower, back underneath the blue trend line, the 100 period moving average, and we start to become a downtrend. But it hasn't done either one of those things for the past 11 days. It's been challenging and just bouncing around in here. So I think it's going to take some significant catalyst. Either for the pound or the US dollar, we need some significant catalyst to drive it outside of this period of congestion, and then we can look for some more trending behavior. Now, for the past 11 days, if you'd have sold the green zone or bought the blue zone, you would have seen a couple of opportunities to see some profit. But I think the clearest and safest opportunity will be the breakout scenario. So for the day today, we're watching this green zone to become our opportunity for at least for the first part of this week here on the pound dollar. The green zone, 1.3210, 1.3240 is where we want to look for either a break to continue to go higher or a bounce to go back down and stay within our period of congestion. Zooming in one more time, and again, I've just taken a little short black trend line connecting the last two resistance highs. That's coming into that same area, giving us again another clue to potential resistance in that same green zone. Again, one of two things is going to happen: bounce or break. And that's about as simplified as I can possibly make it. Let's take it down to the 4-hour time frame. So if we take that context, one of two things is going to happen: a bounce off the green zone to go back down, or a break through the green zone to go back up. If we take those as our two potential opportunities to look for, we look for signs and evidence of that. So sometimes some of the evidence that we're going to look for is a bearish candle that suddenly gets back underneath the green zone, and then we look for it to go back down to the blue zone. Sometimes what we're going to look for is the breakout above the green zone to give us higher confidence that it's going to go back up to the next resistance, which happens to be all the way up here at this pink zone. So one of these two things is going to happen. It's going to give us an indication of selling orders, bearish price action to go lower, or it's going to break out and go higher. Now, we did see back over here on the left-hand side of the chart a false breakout, but we spoke about that in the trade room when it happened. In essence, and just think about this, I just talked about an open and close, a candle body above 3240 to go long. Well, if you just look at the red candle, and let's just say you took a buy at the top of the red candle. Well, let's wait till that one closes. So let's go to the bottom of the blue candle. It actually went up about 30 pips from there. So there was an opportunity to see some profit, 30 pips, even after a breakout open and close above the green zone, even though it was a false move, and then turn back lower. So that's what we're going to look for. We're going to look for it to get above maybe just a simple open and close above the green zone to increase our confidence that it's going to go up, or some indication of reversal. Again, it could be a bearish engulfing candle, something like that that implies that there are sell orders between 32.10 and 40 that the market is going to go back down. We'll watch the news. We have a lot of news this week, some out for the UK and lots out for the US dollar this week, so we'll watch those as well. But one of these two things is going to happen from the green shaded area for the pound dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.